Well, hey, there's a lot to talk about at the moment. We obviously had the Reserve Bank drop the OCR by 0.5% to 2.5%. That's definitely stimulating a little bit more activity out there. Is it enough? I think it might be. There's a bit more positive news coming into the economy. There's one more OCR change to come before Christmas, I think on November the 26th, and that could be another 0.25% decrease or not. Maybe the Reserve Bank feels that they've done enough. Whatever happens, I think next year I'm not expecting to see any more OCR cuts. I think they'll do what they need to do in the lead up to Christmas. Next year will all be about recovery. I think Kiwis will go away for some of this year, feel a little bit better about their lot. There is more positive news coming, and low interest rates is starting to have an impact on our wallets, and that should see a broader base recovery really sort of starting to kick in next year. That'll be positive for the housing market, but I still feel it's a buyer's market. There's a lot of supply out there. I don't think people are as enamored with property as they once were, particularly property investors. Not going to see the same sort of pressure we've seen in previous cycles. Immigration's not there. For us to see large-scale immigration, we really need to see job growth. And that's not really going to come back quickly until we see an increase in consumer and business confidence. So I think next year will be a gradual recovery. You'll see stable house prices, a little bit of an increase, particularly in some parts of the market. Nothing to be too excited about, but stability is a good thing. The main thing for me would just be to see more turnover, to see buyers and sellers able to transact, particularly for sellers that have been sitting out there unable to sell properties for quite some time.